The Aveng Group is a leading infrastructure development group with a strong presence and expertise in over 28 markets across the globe. So we could have a geographic diversification opportunity here.
Yeah, remember this one is called Aveng because it came out of the Anglo Group when Anglo had acquired brands like Grinaker and LTA and started putting them together. It also has businesses that are involved with water purification, quite a big steel processing business, the old Trident steel business.
Market cap here, 5.76 billion rand, price to earnings ratio 20.34, and no dividend has been declared. Let's get a look at the share price graph. We're looking at very similar territory to what we've seen with the others. Going back to that, it's a sector thing.
Yeah, very much so. I mean, you know, I suppose 7-8 years ago, Aveng just had so much cash on the balance sheet. It just looked like such a good share to buy. They could withstand downturns. They had lots of reserves they could call up on. You know, none of those things really worked, really helped the share much at all. And of course, they're also involved with the Competition Commission, if I'm not mistaken, and all of that. And, you know, it's just very difficult to find. You've got to get massive infrastructure development. You've got to build huge roads and bridges and dams. And, you know, the government's got no more money to do that, no matter what they say. That's also going to be scaled back. So once again, you can't actually get excited about the whole thing. And, you know, they've also got overseas operations which are also suffering because of the commodity down cycle, etc.
Paul, Aveng, anything positive? Can I perhaps start with that line of questioning to try and turn things around?
Well, look, they do have some exposure to the kind of higher margin area. You'll perhaps noticed on your way home that the big new Discovery head office, which is being funded by Redefine, I think, and which is Discovery's new home, that's being built by Aveng. So they're picking up that kind of work. There's a broad spread. They do have good infrastructure and roads exposure. You know, there was a management change there. My mate Roger Jardine was there. He threw in the towel. He did some important kind of changes. But in fact, Aveng came off the competition abuse issues looking the worst, if anything, because Carl Grimm and the management team prior to Roger, you know, really didn't come out of that looking good in terms of the way that some of those contracts were bid for. But I think, you know, at the end of the day, that does get put behind them. That is a fine which has been taken, provided for, and so on. The results have not been great, though. So, I mean, I'm afraid the share price slide that you saw there over 5 years is probably an accurate move, the market's assessment of the perpetual decline in earnings and more provisions. Their results have been characterized by lots and lots of negative write-downs against the holding and carrying value of certain assets and other things.
We're going to say then it's still expensive at
I
current
wouldn't
share
touch it.
price.
You know, when you read their financials, I've never seen so many adjustments because of new accounting policies and alterations to accounting policies.
That's a red flag
and
for
restatement
investors.
of prior years. I mean, it's just an accounting. I don't know how accountants even understand it, and I'm one. You know, so, but no, I think you just stand back on this one.
We've got to call it hot or not.
No, it's not hot.
Yeah, not hot for now. It's going to take some new spurt of energy or other kind of development. Again, the order book looking rather threadbare. So there's work out there, but it's not necessarily at the right kind of margins. And for now, anyway, correctly priced, not hot.